Hey traders, this is Ron Hayden at Market Tamer. Happy Thursday. Hope you guys had a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the Dow and the diamonds and the broad market in general. Things were getting really bad at one point today as we headed into the lunch hour. We could have been down, 1,000+ points in the Dow, 100 S&P points. Then there was a reversal. And if I go to charts here, and I type in /WM, which is the Dow. We'll stick with that. These are the E-mini futures. Each candle here is 5 minutes. Right around here was the 9:30 a.m. Eastern Open. Right there. You can see how get around 10:45, and in about an hour, we just went straight down. Rebounded around 11:30, and then once we broke the 9:30 a.m. Eastern Open, the Dow tacked on over 200 points. If I go /ES, which are the S&P futures, it's going to be the same thing. Here's the 9:30 a.m. open. We crash, we rally, we take out 2670, which is basically the 9:30 a.m. high. Then the S&P tacks on almost 30 points in a half an hour, right before the close. So there's a big rally. However, on the day, if I take a look at SPY here, which I do have a bullish position in, and I zoom in, what happened on this daily chart? We're still range bound. Here's a box. I can draw on it for you right now. Got to take out the highs, where they are, around 281 or so. Otherwise, the lows are 260, 250. So after all that, carnage intraday, the pre-market futures crashing, there's really no change. We almost got back to where we were Tuesday. We are range bound. Caution is definitely warranted across all the ETFs. Watch the lows. So on the SPY, watch to 260, 250. We close below there. That's going to be bad news. You go to the diamonds. I want to watch that 240, 250 on the DIA. We go to the Qs. They actually finished in the green today by about 0.71%. I want to watch that low. And I usually use closing lows, 159. We're still $7 ahead of it or above it. And then on IWM, the small caps, they did penetrate the lows. They're the only one to do so. And they did rally back, but their volume was not big. It just has a funny feeling here that we are not done maybe to the downside, but that is what it is. Watch those levels. So I would use today's open, frankly. You know what? Let's just round it off. There's some lows. Let's go 145 on IWM. So we have our markers on each of the four majors. Caution definitely warranted. The bulls did not make any ground today. They just saved their behinds because, again, it could have gotten super ugly today. Here is XLF, the banking ETF. It did intraday penetrate the lows by a little bit, finished at the highs of the day. What do we have here? A box. I'm not going to waste your time to draw boxes on everything because I'm assuming you guys really don't want me to do that anyway. But there's the box, and where was this candle? Where did it finish? In the box. It's bearish on the day-to-day chart because we're below all the major moving averages, and we are range bound. If I go to the semis, SMH, they actually put in a higher low again, but they're sort of range bound too. And then if you look at the transports, IYT, they dipped below the mid-November low, but they closed back above it. I would still watch, 177.50 on the transports. So, if some money was flowing out, did it flow somewhere else? And if we look at bonds here via TLT, the peaks are up here at 121. We're seeing a move right now. And just keep in mind, you're going to see back-to-back candles that pretty much look identical. Sometimes they might be different colors. The U.S. market was closed yesterday in honor of President Bush. So its profit charts here is just duplicating a candle. So ignore that candle yesterday. It really doesn't exist. We did have a move up today, only 0.3%. They're just not running into bonds hand over fist, which is, I think, what gives equities hope that the mother of all tops is not in just yet. I don't believe it is in. A lot more stuff has to happen before that occurs. Here's gold. Were they running into gold? Nope, it was up a whopping 2 cents. Now remember, I know I keep saying this, but gold gets seasonally bullish at the end of the month. When we start seeing signs that it might happen early, I'll also highlight it for you guys too. If we take a quick review of some of the big stocks like Apple, closed at the highs of the day, but it was still down 1%. So this is the flagpole. This is the flag. It's still bearish on the daily. How about Facebook? There was another article out today I saw on Zero Hedge saying that they were giving preferential treatment to some other folks. They were selling client data, I guess our data if you use Facebook. I would just encourage you to read the article, but it's it is what it is, but these guys are just not. I'll leave it at that. Fill in the word. Facebook finished higher by 1.23%, but it really didn't close above any major moving averages. Facebook's still bearish. And here is Amazon. It also finished in the green, 30 bucks, 1.85%, back above some moving averages. If it takes out those previous highs, round it up and just say it gets to about 1800, it would go bullish on the dailies. And here's two stocks to watch. SFIX. They have earnings coming up, according to profit charts, 12/11. So about 5 days away. After earnings, if we don't get too much of a move up, look at all the free real estate. I call this like free range chicken. It's a lot of free range territory, all the way up to 45 bucks. So I'm going to watch this one. I don't want to touch before earnings. I just don't like the unknown about that. But as long as we don't get a massive gap up here, there could be some follow through. From a reward to risk perspective, it looks interesting. And a stock we don't look at very often, but here is Weyerhaeuser. Back in my retail days, we dealt with them. Weyerhaeuser put bullish engulfing in over Tuesday's candle. We broke and closed above the 20-day EMA. First time we've done that solidly since probably back in August. If it gets above the 50-day, it's game on, and I would say 200-day moving average is the target. I mean, you're talking about a $26, $7, $8 stock going to 33. That is a big move. So two items to watch there: SFIX, and Weyerhaeuser. Wish you guys all the best. Have a fantastic Friday and a great weekend. Happy Hanukkah, Merry Christmas, and Happy New Year to everybody out there. Happy Kwanzaa as well. Take good care, folks. We'll see you in Sunday's video. All the best.